We're going to get a double dose of it. I wouldn't mind it. I am relaxed. I like a little tunes when I'm trading as well. Welcome out to our halftime report. Tackle Trading 7/23/2019. And if you are in Utah, the fireworks will begin tonight and tomorrow. It's actually a state holiday here in Utah, Matt. It is our birth of our state, and people do love the 24th of July. To everybody else, that means nothing. But how are you doing today?
I'm doing good.
Yeah, me too. Stock markets, let's get down right to it.
Hold on. I'm doing better than the deficit hawks of the world. I'm doing better than anybody with a conservative mindset from an economic perspective. I'm doing better than that.
You're doing better than me right now.
Yeah.
Oh, it drives Cody crazy. It drives most people crazy. When you think about just your own life, your own budget, the way that you have to live, you can't just make money out of thin air. And the government does it.
Oh, what are you talking about? Let's just erase all of our credit card limits and let's just spend like anybody in the U.S. government.
Make it rain, I guess. That's modern monetary theory. Make it rain. You know, that I love that GIF that's always on social media. You've posted a couple times where that kid's just throwing money out the window, you know?
Oh, yeah. The little baby.
Yeah, that's a great
that one. Or there's one with the cartoon shoveling it into the fire.
Yeah. That's a funny
I like that one too.
Well, we got a lot of stocks to talk about here, Matt. We're going to have this every day on earnings season. There's no doubt about it. You're going to come in, you're going to get reactions, you're going to have discussions about these companies who have reported. I know that we started with the S&P 500 here. You've got a flag pattern up at the top. Matt, I'm still bullish. We're still bullish. We're not going to change that. Market actually is up here at 0.2% today. What's going to get this market really moving one way or the other?
Well, I read an interesting study today. Okay, and I want to get your take on it. It was on CNBC, and I think it was the person who did the research was CNBC, but I can't remember exactly who it was. So shout out to CNBC. That doesn't happen a lot on our halftime report. But it read this: there's been 6 instances since 1990. Okay. And in these 6 instances, the week before an expected rate cut, what do you think the market has done on average in the 6 weeks before an expected rate cut since 1990? Cody, I want your take too. What do you guys think?
I would say that it does very little. I would say neutral.
Okay, Cody?
Let me think about it.
Oh, Cody.
Center Cody. Come on. Good old Texan. Texas doesn't sit on the fence there, Cody.
All right.
Did you literally just leave Texas when you went to Hawaii? I mean, did you leave all of your Texan blood behind?
Oh, all right. Ask me again. What was it?
Okay. There have been 6 times since 1990 when the Fed started decreasing interest rates. So when they start decreasing during the interest rate cycle, right? What does the market on average do in those 6 times?
It drops.
Okay. 6 out of 6, guys. 100% probability. 6 out of 6, it goes up.
Okay.
Yes,
I thought that was too obvious. I mean, that was my first instinct.
Think about it. It goes back to the game. Your first
instinct. What my thing was. It's always like a drop.
You stop. But in terms of it, guys, 6 out of 6, it goes up the week before. So if you bought the week before the announcement, which is tomorrow, and sold the day of the announcement, i.e. buy the rumor, sell the news type scenarios, S&P up average 2.4%, Dow up 2.8%, NASDAQ up on average the week before an expected rate cut 4%.
Interesting.
That's not small numbers.
Interesting. I mean, that was my first instinct, but maybe I just overthink these questions, Matt, like the game on the podcast yesterday. That was pretty funny, actually, listening back to that.
Did you see my tweet?
Yes.
I liked Mark's live reads.
Yeah. Oh, I don't like thinking about that Madden game. It brings back nightmares. But for another time. The S&P is still in an uptrend. I mean, the most likely scenario is between now and next week, it does go up. Problem is a lot of this is baked
scenario, though. Okay, and again, I get that in every single situation, we always think it's different this time. I get that, right? You see it every single time. You've seen it for decades and decades and decades. There's always people that come in and say, well, this time's different. This time's different. There's this technology, and there's this situation. There's this economically. There's this geopolitically. Every single time somebody's going to say this time's different. But in 6 out of 6, that data is strong. So does that change how you're going to approach the market?
I bought yesterday. I bought some things today as well, bullishly. I'm maintaining a bullish delta. Probably not. No, I don't think I'm going to change my approach to it because I was already bullish before the conversation, obviously. And I was telling Cody, I think a day like today, you kind of just maintain what you're doing. It shouldn't be a complex day in the market, Matt. But I do like the data. I mean, it does make sense to me, and it gives me a little bit more confidence about what the trades I put on were to know that we've got. I mean, that's like 30 years of history and 6 different data points. So I like it. It gives me more confidence, and I would continue to buy if I saw a signal that I liked. Cody, what about you?
I am bullish on the market. I am getting a little cautiously worried as we were talking about before, our lawmakers are making stupid decisions, but that's still, those decisions will actually give the market room to continue to fade upwards. So until that changes, I'm going to continue to buy.
Yeah. And the Fed can print a lot more money and we can go a lot more crazy. And we think the market should go down because what the Fed's doing, and yet the market goes up. So
exactly. I'm not going to fight the Fed. I'm not going to fight the debt ceiling being lifted. I'm not going to fight any of that. I'm simply going to say it's stupid. They need to be more responsible, but I'm still going to,
it's not our choice, right? We don't sit on the central bank. We don't vote at the central bank. We don't make the policy decisions. We don't, set the tax code. We have to apply that, right? And we have to be able to read the market. But I will tell you what that data that I read today really kind of reminded me of was just the old adage of buy the rumor, sell the news. Right? That's what it really kind of reminded me of.
And I do love that phrase, Matt, buy the rumor, sell the news, because we've also talked about this in the past. The actual Fed meetings don't necessarily prompt the data that you were talking about. We're not talking about holding through the Fed meeting when they actually lower the interest rate. We're talking about the lead up and the build.
No, it literally was, the study was 1 week, Wednesday to Wednesday, buy blindly and sell before the event. It doesn't include the event. So I thought that data was really kind of interesting, but it really did just remind me of buy the rumor and sell the news type of philosophy. Looking at the market here today, obviously a little bit of price action here on just, I was going through the earnings during the pre-production show here, Tim, and just a tremendous amount of beats there in the market. And yes, we can be, nitpicky about beating lowered guidance. But let me just ring you off a list of these companies, and then we'll look at them from a technical perspective. Coca-Cola beat earnings by 2 cents a share. And I'm just going to read off some of the CNBC headlines here. With adjusted quarterly profit, 73 cents per share. Revenue came in above forecast as well. So Coca-Cola on a nice little beat. Travelers on a beat. Travelers did not beat today. United Technologies beat by 15 cents a share. Harley-Davidson beat by 3 cents a share, but missed on some other revenue projections. Hasbro beat by 78 cents a share, 50 cents a share. I mean, that was just an absolute slaughter on an earnings beat. Biogen beat by about $1.65 a share. Lockheed Martin beat by 23 cents per share. Whirlpool beat by 30 cents a share. TD Ameritrade, whose platform we're looking at right here, beat by 7 cents a share. I mean, major companies all came out with beats here today. Market a little, kind of not responding as well as you would think it would. Tim, what's your read on that?
Well, I did love the quote from Coca-Cola's CEO where he said the storm didn't come. Coca-Cola, global brand, one of the biggest in the world, and they were worried for quarters now because they don't come out and fluff it the way a lot of these companies do. They don't need to.
It's Coca-Cola.
They're a dividend-paying established company. That's right. And he said, listen, the storm didn't come. The economic data that we're seeing, and this was probably the most interesting thing I read this morning, is that the global economy did not hit as bad as we thought it would. We didn't have the downturn because they're all projecting forward to that third and fourth quarter where the EPS numbers start coming back up. I thought it was a pretty decent morning, Matt. The market didn't respond too bullishly in terms of actual percentage move. 0.2% is uninspiring, but I think that just might be technicals. You've got a 3,000 barrier there that is a technical resistance.
Well, the IMF also came out today and they released their updated, projections on GDP from a global perspective. And in January, they were growing at, I believe, at about 3.5%. In April, they lowered that to 3.1%. excuse me, 3.2%. And then today they lowered their adjustment from a growth perspective down to 3.1%. So, I mean, that throws a little bit of a cold water on the earnings parade today with the IMF coming out and downgraded global economic growth. And so, Coca-Cola says, that's not what they saw, but Coca-Cola also sells a brand that, it's not exactly selling Harleys.
No, it's not.
It's a little bit different. You're not selling chip manufacturing companies and whatnot. You're selling Coca-Cola products, which are a cheap consumer staple type company. And we've seen what consumer staples have done over the last year, Tim. I mean, it's one of the strongest sectors out there year to date. And when you're talking about a market that's up near 20% year to date, you would think technology leads the way, correct? I mean, that's what you would think. You would think consumer discretionary leads the way. And those two certainly have been doing really, really well. But there's old consumer staples right here just being a juggernaut. I mean, and that's what you're seeing. And so, it's interesting to kind of watch that. But, it was just, I was a little surprised that we didn't see a little bit of greater price appreciation on the backs of really no economics came out today. We don't have any economics this week to really concern ourselves with that much. We have the Fed next week. And so you saw a little bit of a price action, but you kind of hit the nail on the head here, T. You saw this from an overnight perspective. Here's your Monday, here's your Tuesday, here's coming into the Tuesday open. And really right here at 3,000, you see this European market kind of open up. The Asian markets open up here. Right when the cash market opens up, right there, T, you're sitting right at 3,000, which is that significant whole number. It's played a role in intraday support resistance zones. And that just came back down just a little bit, forming a little bit of a bullish retracement from an intraday perspective on the 30-minute chart and on the hour chart. I do expect price appreciation coming out of this.
Quick look at Biogen and Coca-Cola. I think out of the charts, and Sherwin-Williams, 3 companies on the S&P that you had mentioned, KO just taken off. I mean, obviously earnings reaction here very, very strong. Biogen, which is one of the biggest biotech companies in the market. I'm starting to get interested in the biotech ETF, by the way.
Very quickly.
Yep.
On Coca-Cola, I don't want to kind of leave real quick. When you're looking at Coca-Cola's gap, you got an ascending triangle situation in a bullish uptrend that equates to a breakaway gap. And that's what we're seeing here on the after the market is open. It breaks out of the range, it runs. And when you're looking at a situation like that, you might want to wait a couple of days for it to slow down. Or if you have the skill set from an intraday perspective, you can find good bullish retracements or high base breakouts on an intraday.
5.74% has to be about one of the biggest upside earnings I can remember on Coca-Cola in some time.
That's insane for Coca-Cola.
That's a huge move.
Like that.
That's a huge move. Biogen, like we were mentioning, and you had mentioned earlier, Matt, had a real strong earnings. Now, the candle, I don't love it yet, which is why you got to talk about open, close, and confirmation and whatnot. I probably would not do anything with this today. I need more data, more information for me. But it's been on a long I've had this on my, fundamentally strong watch list in the past, Matt, for years.
It's good. It's a good covered call stock too, and it's a fundamentally strong stock.
Just needed to come back, needed to make a little bit of a recovery, develop a trend.
I remember the news that really drove this. Was it a failed drug?
If I remember right, one of the drugs got pulled.
Was it a failed drug, like in third trials or something along those lines? What I'm seeing here, though, on the weekly chart, T, is interesting. You see a double bottom, double top scenario, and then you see a rising type of support level, and then you have horizontal resistance. You do have a W formation if you're looking to pick the rotten apples out of the bunch. This one is interesting. It is a fundamentally strong stock. It's a good covered call stock. I would have to see a close above 242.5 on the daily and weekly chart to kind of start thinking about any type of bullish situation. But a close above those levels right there, T. Yeah, I would call that confirmation on a bullish reversal W formation.
And one last one. This one really impressed me as well. Sherwin-Williams, basic materials company, specialty chemical sector, SHW, not C. Schwab. That's
right. Oh, wow.
Just a beautiful breakout. I mean, we're talking about a $40 billion company, Matt, that just broke out of a high point here, There's some strength. I mean, there is weakness in the market today as well, but there's strength. It's kind of a mixed bag. The market's not taken off in general, but I did like some of the reactions out of earnings. I will tell you that.
Yeah, Sherwin-Williams, silently year to date, you're talking about a company that's up 100 points, about 25%.
Ding, 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 ding.
And just broke out of 480, which if you look at this on the weekly chart, T, that 480 was not not small resistance. That was not the marginal line, right? That was a very strong level of resistance over here at the high of 18, over here at the high of 19. You broke out on strong earnings. That's a watch list stock now.
Absolutely. And by the way, welcome out, everybody. We're sitting here talking markets, and I just do want everybody to put in the chat daily routine. One of the things we do the halftime report format is because it's part of our daily routine, and we're just sharing.
Part of the daily routine is to give us a like and a share as well.
That's exactly right. Thumbs up, share it, get the information out there. Keep your fingers on the keyboard because that engagement does matter to us. Makes me know that you're there. SHW, Ron, and let's move on to the Dow Jones, though, and talk about the YM contract. Obviously, the Coca-Cola chart we already looked at. That's what took off. We've discussed the pivot relationships being stronger. I'm also going to give you some companies I love. Goldman Sachs, Matt, we talked about this earnings report, and I know it's not a huge move, 1.7%. I know they're the evil empire. It's going to prompt a rant. Get your soapbox ready. But man,
Deutsche Bank has.
I was already typing in that signal before you even finished caveating that he's not going to like it.
Listen, I rant against Goldman, but I don't blame Goldman for making money on their trading.
Dude, I love the way they're riding that 9 EMA. I love the way that they're trending. High base on that flag. I don't know if you'd call that a break or a flag. Either way, it's both probably. But
can I just say one thing? They didn't need a bailout in 08.
No.
That's all I'm going to say.
No, they didn't.
That's all I'm going to say. They did not need a bailout in 08.
They came from a position of leverage, though. What was that movie? Did we ever highlight that on our podcast? The one about
it was called Too Big to Fail, and we recorded the podcast on it. And I was so disgusted with the movie that we didn't release it.
Let me maybe pull that one out of the archive.
The worst movie of all time. I mean,
it was okay.
The most idiotic propaganda bullshit nonsense I've ever watched in my life. I mean, the way they portrayed the love affair between Paulson and Bernanke was disgusting.
Yeah, there were some moments in that movie that did make you cringe. It was cringe. Where
what's his name got down on one knee in front of Pelosi and said, "I need your help."
Okay, that's my rant. Move on.
All right, I don't want to think about that movie anymore. It will just get me all on a rant, and we've got too much to do. Goldman Sachs running American Express. This has been an option.
Let's look at Goldman Sachs very quickly here.
Sure.
Post earnings, positive response to the earnings, and their earnings was rock star level.
Yeah.
It was rock star level. They destroyed their earnings EPS, destroyed their earnings PS, and now you're breaking and closing above on a high base. That's a continuation pattern, very similar to what we saw here before the earnings. If you get to close above those levels, I mean, you should have good triggers there.
Well, dude, I mean, we talked about it on the halftime report last week on the earnings announcement. And by the way, that's why it went right on a long-term watch list, And I bought a leap option, Matt, because when it's a fundamentally strong stock with just a trend, short-term trading signals are a little different. Like step system rules for me are like swing trading, position trading. If I'm going to hold and like try to ride the entire trend, I tend to go a little longer in options. And we actually got a question in our clubhouse just yesterday from Steve. I can't remember his last name. Steve asked something. I'll have to look it up. But basically asking what option chain should I play? And you can go all the way out to January. You can play as much time as you want when you're trading. There's no limit on the amount of time that you play. But Goldman Sachs looking very, very strong. You know what else is looking amazing is American Express. And it was a tough trigger. It was, it's got all kinds of different caveats here, but it's been a trender for a reason. It's now back up near the high.
Because their earnings, though.
Exactly.
I mean, that threw kind of a wrench here. So
I think it's been on the report 8 times this year. Just every time it's set up, we put it on there.
Yeah, that would be a tough trigger. I mean, you would have to be really good watching this on the intraday to really kind of catch that. You're chasing it a little bit as it's approaching that all-time high at 129, but a breakout here is legit.
Lots of other companies showing me strength. I do like the Home Depot pullback, but man, this is where that debate on you've got to have your own rules. I mean, do you trigger aggressively on the intraday? You might already be in. If you're waiting for confirmation at the close, you would be waiting here, Matt.
I could understand somebody triggering in right here above 212.25 on the intraday. If you want to be aggressive, cash open strong, a little bit of profit taking, coming back down into the breakout channel here at 112. Nice little tight stop loss under 211. Yeah, I could sign up for that. But the conservative approach would wait to see a close above this level and probably the 9, reclaim the 9 at 213.35, and maybe then get it above the high of the day at 214.16. I think with the deep pullback here coming into those moving averages, you're obviously seeing a little bit of slowing momentum with that inside candle, which would be a bullish Harami type candlestick pattern. And so you get you got your bounce, you got your pivot candle. Now you're just sitting waiting for confirmation here. And the aggressive trader will look at that from, getting above the high of yesterday or playing it from the intraday pullback like we just talked about. The conservative trader would wait for confirmation, then trigger above the previous day's high. So it's just, it's not our job to tell people who they are as traders, right? I mean, it's our job to talk to them about the different strategies of order entry and understanding the differences between aggressive and conservative triggers, and figuring out who you are over time as an aggressive or a conservative trader. But the reality is the only thing you're doing is waiting for one day's confirmation. I mean, that's the only thing you're doing.
Yeah, definitely in a little bit of that pinch zone that Coach Mark was talking about yesterday as well, in between the 9 and the 20.
Oh, not the tickle? It's not the tickle anymore?
Maybe the tickle is when you actually get confirmation after the pinch. I don't know. I'm just trying.
It's just gross. The tickle's gross. We're not going with the tickle.
All right.
Not happening.
Move on to the NASDAQ NQ contract. And I got to read this off while you bring the chart up. July 24th, Facebook. July 25th, Comcast. Amazon. These are $200 billion companies plus that are on the NASDAQ. Amazon, July 25th. Google, July 25th. Apple, July 30th. A lot of big names right in the next few days here, Matt. That's kind of why we're seeing it.
I mean, a lot of big names, but based on, what we've been seeing in earnings so far this last couple of weeks, Tim, you can anticipate good 75% of those companies beating earnings.
That's what they do. I mean,
what are we? I haven't looked at FactSet lately, but it feels close to high 70s, low 80s.
Yeah. I mean, they've had about 18% of companies come in and report already. And most of, I can't remember. I don't want to quote the exact number. I'll get it for tomorrow. But I was reading an article.
It's got to be high 70s, low 80s.
It's above the 5-year moving average on earnings beats. So I know that it's not a bad quarter.
What's the 5-year average? It's got to be around
75, 70%, something like that.
Lord almighty.
Dude, they just beat. It's how they set up the game.
It is. And again, we can sit here and just point out the reality that, we lowered the bar to beat the bar. I mean, I get that, but the reality is the market doesn't care. The market's going to trade the way the price goes.
Yeah, that's exactly right. And right now, until I get through a couple of these earnings plays, I'm waiting for a breakout on the NASDAQ. I will say this, though, when we get Google and Amazon coming through, if that does break the high, tradable for me. I will, looking at
trade with your eyes. Trade with your eyes.
Yeah,
plug your nose and buy.
RTY real quick. There's not much there, like there isn't much there every day. Thank God for cash flow. And I will tab you, everybody in the chat, just type in cash flow condors. If you're a condors trader, you know that. Matt, anything to see with the rut here?
No, it's a boring chart.
Yep, I like it. Dollar index, what a move. I mean, guys.
What a 3-day move.
Yeah. 0.5% on the dollar is not like 0.5% on other things. That's a huge move, in the biggest product in the world. The US dollar is the #1 product in the entire world by size and importance. And Matt, here we are. We're breaking out of a little inverted head and shoulders pattern. I don't know if that's a confirmed breakout or not. I know we still got long-term mess, and it's mostly long-term neutral.
I would call it short-term confirmation.
Short-term,
not long-term. Not long-term, right? Long-term, you got to break out of the highs here. But short term, you close above 197.52. That's got to be called a breakout here. I mean, you got a lower high. I mean, you got a higher low on the 200-day moving average. Now you're breaking out after a left shoulder head, right shoulder type breakout out of the neck formation. Looking at that neck formation right there, you got to call that a breakout.
Cody, what's your read on this currency market right now? I know that you've been doing the Forex report each and every weekend the last couple, and that's kind of going to be a part of your moving forward. What are you seeing in the currency markets?
Well, the main thing I've been watching the currency markets is the British pound get destroyed. But with the US dollar, this pop right here, I definitely want to see it close, like Matt was saying, because I've traded the US dollar to know that it's very possible that we're just going to get a very long wick by the end of the day. It's going to close, not be a breakout. So wait for the close. I would really need confirmation on this one. And then the euro opposite, same thing. I need it to get below that 1.125 down there before I'm really looking at British pound. That's what I've been keeping my eye on.
Yeah, we re-triggered here earlier yesterday.
Mm-hmm. Mm-hmm.
That was the call in the Forex report as well. Boris Johnson officially is elected to prime minister. He vows and pledges and desires to have a renegotiated Brexit with the Eurozone. The Eurozone says, good luck with that. Boris Johnson then pledges to have a clean Brexit. And I don't believe it, and the market doesn't believe it either.
It's quite a conundrum they have over there politically right now. That Boris Johnson, he is a character. I don't know if all of our team out there knows who he is.
Like, he also just looks like a character.
Yeah.
Like,
have you seen the Twitter photos of him and Trump next to each other?
It's funny.
I can only imagine. Now I gotta look it up.
Their hair's all waving in the background. It's funny.
Yeah. He is mini Trump.
Hey, listen, he is building his political career off the Donald Trump mentality.
Yeah, that's right.
And, we'll see how he does in the UK. Theresa May obviously couldn't bring it home, and I'm not sure there's a UK politician that can bring it home.
I'm not sure there is either. It's going to be interesting to watch. By the way,
good luck to him, though.
Yeah, good luck. Of course. I mean, they're one of our top trading partners, one of our allies. We want them to succeed, but it's a mess. It's been a mess now for about 3 or 4 years. Other currency relationships. I mean, basically dollar up, everything else down right now. Move on to commodities.
Very quickly, from the euro and the dollar specifically are going to have some very, very volatile moments over the next couple of days, Tim. And for me, the next 2 days it's not about the Fed. It's not about, there's earnings I care about. But you have flash manufacturing reports coming out of Europe, Germany, France specifically. You have manufacturing PMI reports coming out, service PMI reports coming out. Those are major economic reports for the Eurozone. But the biggest kicker is the ECB on Thursday. The ECB on Thursday is going to announce monetary policy, and nobody expects them to lower interest rates into the negative territory because effectively they already are at a negative with their quantitative easing program and their actual interest rate policy at zero interest rates at this point. But I do expect two things to come out of the ECB, because I think Draghi's going to do what Draghi does best in terms until he's out of office coming in later in this year. And he's going to go dovish, in my opinion. And he's going to go dovish in terms of more stimulus, more quantitative easing. That's what I expect to happen coming into Thursday. And that's one of the reasons why the euro is coming down so strong today. And one of the reasons why the dollar is moving up so aggressively today is bad economic policy and bad economics in general coming out of the Eurozone. So keep an eye on the euro dollar, the British pound dollar cross pair, the Swiss franc dollar cross pair over the next couple of days, because every one of those, either the ECB or the European economic reports, those are going to have a big impact on those currencies and the cross currencies.
Mm-hmm. Yeah, absolutely. And I think, like you said, earnings as well, obviously, is going to continue.
Which means the dollar is not a swing trading vehicle right now. Even with the breakout of that's a tough swing trading candidate when you have the ECB on tap in 2 days. It's going to be a day trading candidate over the next couple of days.
Yeah, I'm not touching it.
I have a hard time buying the dollar right now. I mean, outside of potentially day trading it, but I have a hard time buying it with the Fed announcement next week. I mean, they're going to lower rates, and how it reacts to it, I have no idea. But I would expect it to drop off of lowering interest rates, Matt. I know that news event doesn't always play that way.
Well, it depends, though. I mean, if a quarter point cut is baked in, it depends what they say, right? Yeah. I mean, my anticipation is this on the Fed next week. The Fed is going to cut interest rates by 1/4 of a point. Okay. They're also going to indicate, number two, that to offset not cutting a 50-point cut, because there's about 1/4 of the market thinks it's a 50-point cut and about 75% thinks it's a 25-point cut. I'm in the 75%. I think it's going to be a 25-point cut, but to appease the market, I also believe that they're going to ease on their balance sheet a little bit more aggressively, meaning they're going to end it sooner than anticipated. And that's a reduction of I think they have $3.7 trillion on their balance sheet right now. So they're going to end that reduction sooner than anticipated. That should give the market a little bit of a cause to buy. But what I'm really interested in is what they project in the back half of 19 and 2020 from an interest rate cycle. Is this a one-time cut, or is this something a little bit more prolonged where we're going to be cutting continuously until we effectively start competing with Europe and Japan for the craziest people of the world history? So that's what I'm interested in. Really
so many ideas.
I don't need to give them ideas. Are you kidding me? They have fully embraced modern monetary theory. And I don't say this as a joke, guys. They have fully embraced modern monetary theory. So has our United States government. And so when we talk about all this socialism nonsense that we're seeing, it starts at the top of the market right now.
Mm-hmm. Yeah, no, there's no doubt about it. And it's not a right-left debate. It is everybody.
No, it is. It is a modern monetary theory playpen, and they don't know where it's going to go. And we're just going to have to ride the wave. And that's why I love owning silver.
Give me a rundown through the commodities. Actually, that's a good transition. Silver is up 0.25% today, even with the dollar.
That's amazing.
It's amazing to me. I mean, the dollar's up 0.5%, silver's up. I mean, that's interesting. That just goes to show the momentum behind that silver move right now. Raw demand for that.
And as the dollar was going up internationally, obviously you saw silver come down internationally. But something, I mean, you found this support level at 1620, resistance over here, support over here, support over here. You got a double bottom on the intraday at 1620, obviously a new support level from an intraday. And then it was off to the races and you reclaimed and broke back up above that 1645 level. I said this yesterday. I'm going to continue to say it as long as it's above 16, I'm some degree of bullish.
Yeah, I agree with that. And gold is actually still holding that little triangle breakout. It's only down about 0.5%, which, I mean, that's to par for the course. That's what I would have expected with silver, is a little red candle on the green.
The dollar's smoking right now.
Yeah, and gold is holding.
It gets smoked right now.
It dinged right on that moving average. Oh, sure did. It's playing lots of good defense.
Love it. You never know what the future holds, but you got to love it when your commodity you're looking at on the back of a dollar doing what it did today on a very, very aggressively bullish candle. And you say, well, Matt, the dollar's only up 0.45% today. Guys, dollars don't move like stocks.
No.
They just don't move percentage.
That's a fantastic point to point out, is that move and the dollar is huge.
It's a massive move.
Yeah.
If you saw a 0.5% increase in the S&P, we'd call it a boring day.
Yep.
You see a 0.5% increase in the dollar, and it's like, oh my God, that is an amazing, amazing movement in the dollar. And so that's kind of what it does. It doesn't move 1% very often. When you're looking at gold coming back to the GC contract here on a day where the dollar's smoking, it played defense. And we've talked about this with a lot of things. We like it when we see defense and support hold. And so it kind of held that 1420 level, kissed off the rising 20. You still got to be slightly bullish on gold and probably bullish, +2 on silver.
Yeah, I love it. And crude oil not doing much here, dojing. I'm still very concerned about this one, but I got to say again, these commodities are playing better than I would have expected. Dollar rallying with the weakness I saw in crude and some of the concerns. I thought crude was going to sell on this news, Matt, and on that information.
Yeah, I've said this for a while, though. Crude is not as closely inverted to the dollar as gold is.
Yep.
I mean, back in 15 years ago when 90% of the entire world market was financed and priced in US dollars. I mean, yes, they were completely inverted. They have like a negative 0.9, correlation status. But now, what is it? 40 to 45% of the world oil market is financed and priced in US dollars.
Yeah.
China is now buying, Saudi Arabian oil with Chinese yuan. So, it's just, you've had a decoupling of these tradable instruments, but I get it. I mean, when you see the dollar up so big, it's still 40% of the world oil market priced in dollars. You would think, oil would come down a little bit more, played a little defense. It's still way outside of deep out of the money cash flow systems.
It's probably been about a year since I've seen the data on how much of the oil market is transacted in what currencies, but the euro and the dollar are the 1 and 2, right? And the yuan is picking itself up.
China's trying to, but I mean, they've just been doing it for 5 years. I mean, the United States dollar has reigned supreme for, 45 years now with oil?
Yeah, but that euro, I mean, a lot of trade is done in euros too. So
well, it is. I mean, the Eurozone does it. Some African countries do it as well. But you're seeing a reduction in that, no doubt.
I need to go look at it.
It will take China a long time to get to the point where the world community embraces the Chinese yuan the same way they do the US dollar. It's not going to happen in my lifetime.
Yep. Yep. All right. Moving on to crypto, mandatory quick look at Bitcoin and 9,992 on the actual, actually 10,015, right at 10K, Matt. We've been saying that has been a kind of a line in the sand for quite some time. It's holding it for now. Not much else to update. Actually,
I could draw random lines on the chart, and that would be better technical analysis than anything either one of us could say here.
you know what's fascinating? Bitcoin down 2% is a light day on.
Oh, that's a
Bitcoin.
doji on Bitcoin.
That's not much going on.
It's like the day trader's like, come on, give us our 10% price movement. Either way, let's go.
Let's rock and roll. A lot of earnings coming up, guys. Chipotle, UTX, Lockheed Martin. We talked about many of these different ones. Some tonight, some tomorrow. Boeing, Deutsche Bank, Facebook, AT&T. Matt, any earnings roundup you want to do before we move on to rapid fire?
I'm just really interested in the Boeing's earnings report this week.
Yeah, tomorrow I think that Boeing is going to be really fascinating. And guys, we're at that point in our show where it is rapid fire time, and no filibustering here today. I just want to comment on a couple of posts I saw here in the chat. Ilka saying he's using the step system rules to help him apply his new Delta systems. Finished it, got his certificate. I love hearing that, Ilka. Make sure you finish the step system, guys. That is the course we just released on tackle trading. And I really love seeing this comment from Patricia.
That certificate gets you into that is your ticket. It is your key into the step system mastermind group starting in August. So once again, the only people that will be attending those mastermind groups for the swing trading step system is people who have actually taken and passed the course, including some of those mundane quizzes.
And two more quick comments I want to acknowledge. Patricia's saying, I've been doing cover call and Condor cash flow for a long time, and I'm starting now with my Delta system. So I love seeing that. Patricia, Team Tackle member for a long time. Tanner saying, hey, I'm going back to paper on Delta. It's been getting it handed to me. Tanner, back test, man. I'll tell you, I'll give you a good pro tip here, coaching tip and a mentoring tip. Get back in there and back test and make sure you understand your rules and your expectancy, and that will help you a lot.
Well, not just back test one set of rules, back test multiple sets of rules. Let's see from mixing and matching aggressive versus conservative stop losses. I mean, it just you got to find your edge, and finding your edge takes time.
Yeah. Ime, I have a joke for that I cannot put on the air. So Ime says
can I say something going along with Tanner and Marie?
Yeah.
Especially with Marie. Marie is the theta queen. She is cash flow, cash flow, cash flow, cash flow. And with cash flow, you have a kind of a hands-off approach to cash flow systems, right? You don't want to aggressively manage those. You don't want to, nickel and dime them. You don't want to micromanage them. With Delta systems, you have to be in front of the market more. Mm-hmm. You have to be pinpoint more. You have to be that market assassin. You can't be that, let me just go write a covered call and go play golf for the next 4 days, right? You have to be present. You have to be a little bit more analytical driven. You have to be, really kind of understanding back testing. I mean, with the covered call, it's like, okay, let me buy a stock, sell 40 Delta with 30 days. And I don't care until, strike prices hit or net liquidation values are hit.
Which we love, by the way.
Oh, absolutely. I'm just saying when you make transitions, it takes some time because there's different trading personalities, different management styles and personalities as well.
Well, and they're not competing. They're complementary.
Oh, and by the way, I was talking to Sylvia, one of our amazing team members over there at Legacy. She spent the last couple of days with you kind of working on cash flow systems, right? Mm-hmm. And she was at my house after you left yesterday for about an hour before she went to the airport. And she's making a transition from being a aggressive Delta trader to now a theta trader. And she's struggling with that, not from a rules perspective, but from a management perspective and personality perspective, because she's going to want to micromanage that because she's a very aggressive day trader, very aggressive swing trader. And you can't be that way in theta systems. So after you left, I spoke to her for about 45 minutes just on the understanding that you can't go in and micromanaging theta systems. You just can't.
I actually had a student contact me about something just like that. She had some cover calls on. She had some iron condor. She was like, should I pull off this wing of the iron condor while it's moving right now? I'm like, why? Wait, why?
Like it broke a 30-minute intraday support level. And it's like, should I aggressively manage my, it's like you're 4 ATRs away. It's like, but it broke an intermediate support level, Matt. The price should go down on the intraday chart. It's like, oh my God, what are we doing?
Yeah.
right? It's just a different beast.
It's a different system. Let it ride. Let that condor fly, and let it make you some money.
Yep. Rapid fire, boys. Let's rock and roll here. X, Matt, you get this one first. One of your favorite companies.
One of my favorite companies in the world. There's no doubt about that. Love this company from a cash flow perspective. Love boomerang trades on this company. Love the covered calls on this company as well. I currently don't have anything in the United States still since an early April earnings report from 18, but I like what I'm seeing here. I like the pivot relationship. I'm seeing a little bit of a reversal type formation kind of establishing in US Steel. I still believe this little company is a little engine that could, little train that could, and it's just getting up that mountain. But I do believe we do need that infrastructure deal to really see this company fly.
Correct.
Pete talked about it on the podcast a couple of weeks ago, but you're having clean triggers right here above 16 on US Steel. Earnings reports coming up very quickly. I would probably wait till post earnings. If we see a positive response to earnings, I'm looking to get back into covered calls and long-term investments on stuff.
I like the reversal signals in there. Roku next. I'll take this one. One of the most interesting companies in the marketplace. I see them on the price volume leadership every day. When I see smaller mid-cap companies on the top of volume and price together right next to Amazon and Apple, it makes me know that a lot of the algorithms and active traders are trading this stock. Down today on a pullback, earnings coming up. There's nothing tradable for me personally here unless you're looking at volatility trades, but it's on my volatility watch list. There's no doubt about it. Another one on there is Beyond Meat, BYND. Cody is next.
So Beyond Meat has popped up to a previous resistance level that it had at $200. And until it can get above that, it is already overextended, pushing up against resistance. It did have that wedge and broke above 178. And about at that point is when it ran all the way up to 200 very quickly. And now we can't touch it unless it breaks.
What Cody is really saying here, Tim, is there's no analysis here. Out of the money call options.
Yeah, like what do you do with that? Unless it breaks 200.
This literally makes my brain excited when I look at the option shade on Beyond Meat.
How does that make you excited?
Look at the no. I'm because of so many of the weird things in the call put relationships.
You're
and the way that
10%
they're priced
to get into the trade with a 115-day contract.
Dude, I'm telling you, look at the synthetic call put on the January 21 contract. It's amazing to me the way that this.
Lord Almighty.
Well, that's for like a coach's show or a cash flow club, not rapid fire, but it literally.
This is for the insanity of it's just.
They also have like
the 195. The 200 strike price has a 59 delta and a cost perspective of about $25.
You could sell the put. Think about this, Matt. Do this real quick. I know it's
sell the put and buy 5 contracts on the call side.
You could sell the 200 put, buy the 200 call, pick up a $70 or $67 credit. Your assumed cost of the stock would be about $133.
Yeah, I know.
If you buy the stock right now, it's insane. You
should never buy the stock here.
Oh, yeah. It is an option trading candidate. Look at the volume, 8 million shares today.
Yeah, I know. It's crazy.
All right, ADI, Analog Devices. And Matt, you get this one.
Okay, ADI. Mm-hmm. ADI, nice little breakout candidate, broke out of a very, very important resistance level. I have this as a cup and handle formation. You have your cup, you have your handle, you have your increase in support. You could also call that an ascending triangle type situation. I love the breakout of the 52-week high right here at 118. Very clean trigger, got plenty of time before earnings. This looks like it's going to confirm here today on that breakout. You saw the cash open, test that support level a little bit, and then it's going up, should close towards a high. Any trigger above today's high is perfectly fine. Love that breakout. Who found that?
That is Ilka. He just got his step certificate, and he is finding great step setups.
Love it.
TXT, I'll take this one. Neutral. I mean, gap down on earnings looks like it was built in, and now you're backfilling into a neutral range. I don't see much else there.
Dow Jones short.
Oracle. Cody went mute and went dark. I don't know if he's there, Matt. I'm pitching it back to you.
Oracle. I'll do Oracle. I like Oracle. And this is what I like about Oracle. Real choppy on the retracement here. Not here, but as it's trying to find support. But here's what I like about it, Tim. You got old resistance over here, which is now the new support level over here. Multiple times intraday resistance, multiple times intraday support. There's no trigger yet. You got to reclaim that 30-minute chart here. So if I drop this down into that 30-minute chart, you got to kind of find that trigger where you want to trigger above. You can trigger above today's high, but where I'm kind of looking at, it's got to get back up above 58.50. And given the fact that it's been very choppy and volatile, I would need that close above that 58.50 level. That would reclaim the 20-day moving average, reclaim intraday resistance levels, also reclaim the 9 EMA at that point. Give me a close above 58.50. That is step system 101 right there. And then we're off to the races. Targeting would be 60 by 62.5. Stop loss, very clean stop loss underneath 57.5.
I love the analysis there. And if you love rapid fire, type in rapid fire in the chat and give us a like, and make sure you subscribe to our channel. I'm taking the next 5 here, Matt. LK, give them to me quick. Luck and Coffee. I don't know the company. I do like the reversal signal. IPO. I don't have an earnings. I would have to dig into it further before I could really give any kind of feedback.
Like that breakout, though.
I do like that. UNH. Dow Component Healthcare, healthcare, nice pullback, earnings breakout potentially here. I do like that. That's going to go on.
That's a good retracement.
Yeah.
That is a good retracement. Breakout on breakout, come pull back down, old breakout channel here, 200-day moving average, 20-day moving average, hammer type candle. That step system module 3.
Good find, young man. Justin, like seeing it. Boeing from Majin. It's all going to be earnings here, Majin. Just be aware, you've got earnings coming up literally tomorrow. Make sure you check that and you're aware of what
nothing before earnings, but keep an eye on 380 if it breaks out of 380.
Walmart from Steve, and that and I got to learn how to pronounce that middle name. Cybrisson, I guess. Jacobs here. Steve was the one who asked the question in the clubhouse.
Great question.
Deep retracement, big red candles until it slows down. Needs some dojis, needs some slowing, but interested in the retracement. Keep moving here. Best Buy, Matt, is the stock of the day. Just go to Tackle Trading on Instagram. We're going to be posting a video I did about 2 minutes. It's got a nice breakout there, and I do like some of the fundamentals on Best Buy. I was actually interested in that when I looked into it a little bit deeper.
Breakout after a flag pattern hitting old resistance, yeah.
Looking strong. Good. On the option report this week, by the way. Yep. Pepsi and Coke, we talked about. Matt, I'm going to give these to you. We already looked at Coke. Give me Pepsi and do a little cross analysis.
I'm a little concerned about Coca-Cola, especially given the fact, and not Coca-Cola, but Pepsi, given the fact that Coca-Cola did so well on its earnings. You got M formation type situations, a breaking of support. You got rolling over moving averages. A lot of times when I see this type of price movement after a very consistent bullish uptrend, you're going to see a short-term bearish downtrend typically in this type of M formation. And that's when I want to pull it up to the weekly chart, watch that retracement come down into about 127, 128. Keep an eye on those levels.
Microsoft and TAP. Cody, I'm going to give you 2 quick ones. Come back in here, young man.
What's going on?
Nope, I'm taking him off. Matt, Microsoft, give me a rapid fire.
Oh, come on. Why are you going to steal it back from me?
It looked like your video was stalling.
Because you're on Hawaiian time right now, which I understand, and I do have some jealousy towards.
Anything starts with a breakout on Microsoft. There's no analysis until you see a breakout on Microsoft based on what we're seeing in the trend and the pattern. What's the next one?
TAP, Molson Coors.
Molson Coors. Speaking of old Molson Coors, Tim, Molson Coors has been a stable company in America for how long?
Oh, God, over 100 years. Yeah, give me a Coors can. I'll have to check the date on when they made it. Yeah.
100 years?
I think so, yeah.
Okay, this might break your Texan heart, Cody. Molson Coors just got surpassed in market cap by Beyond Meat today.
Oh. Fake hamburgers are bigger than beer. No.
Yep.
We're canceling Tuesday. It's over. We are done.
Done.
Oh, God.
Molson Coors is now a smaller company in market cap than Beyond Meat. Wow.
Well, that's about as dumb as the fact that there are more people buying Bitcoin than Apple stock. And it was like, okay, yeah, let's buy something that's speculative and not something that's fundamentally strong.
Yep. Kansas City Southern KSU, real quick, Matt. Couple more, and then we're done.
Jimbo's like, Matt, rapid fire, you free for a beer or a cranberry vodka? I'm acting all manly right now, and you just put the cranberry vodka there.
There is a scene from The Departed I won't bring up right now.
Tomorrow night.
I know the exact scene that you.
Oh, I know the scene. I am Leo in that scene.
That is a good scene.
All right. KSU from a deep here. Quick one, Matt. You take this one.
Kansas City.
Railroads.
Kansas City Railroads. A potential breakout pattern here. A little fake out situation. Given the fake out situation, I'm out.
Probably cleaner on the weekly chart. Kind of a tough swing trade on that one.
Yeah, I would say so too, T. It's tough on the weekly too, though.
Yeah, it is. Lockheed Martin, one of my favorite American companies right here. Big fan. Nasty, weird looking candle, Matt. Look at that candlestick. Holy cow. Long lower tail, long upper body. Can't figure out what it wants to do. Get more down here. It was earnings, yeah. And CCL, last one, Matt, Carnival Cruise Lines. If we missed any, we'll do them tomorrow. Come back and join us.
CCL, nice little WM formation type formula. We don't yet know because we got to see it kind of break out one way or the other. You got clean triggers on the top side at 47 and a clean trigger on the bottom side right here at about 44.75. Keep an eye on those levels.
Yeah, guys, there were a lot of questions here in the chat. I might have missed some when we were talking about different topics and whatnot. Hit us up in the clubhouse, tackletrading.com. Just go there, join the clubhouse. I check every post at least once a day, and I just make sure I look for the questions. Find the clubhouse, join the clubhouse, and be there. Cody,
New
we got
podcast out, T.
Man, that was a fun one too.
Podcast out.
Oh, guys, listen, if you want to have some inspiration day today, go and listen to the podcast because we had a chance to interview somebody who was just in many of your shoes, probably is watching this halftime report right now, a fellow member of our community, Hero Abanon.
Many of you guys know him. Many of you guys know him. He's been hashtag Team Tackle since 16. He's a valuable member of our community. You know, he's helped people out a lot. Like I said in the podcast yesterday, I love Hero because of his why, right? Yeah. I mean, this is a guy who was a hard asset type investor for most of his life, military veteran. I met him in a ballroom for Legacy Education a few years ago. And I remember him telling me at the time we were sitting down on day 3 and he's like, Matt, I want to do this for my son. And, you know, he wasn't really going to be the trader. He wanted to do something for his autistic son. And his son's name is Joshua. And so they move forward together and, you know, it just to see what he's done and then to see Hero become this amazing trader and cash flow expert and just fully embrace the financial world has just been so amazing. And, you know, he wants to make more money. And guess why he wants to make more money, Tim? His sole reason. He's a very religious man and he just wants to give back. He gives half of his gains to charity, guys.
Yeah,
I mean, this is an amazing, amazing man. Love Hero.
By the way, and he's always the fly on the wall until he's not. And then he just pops in the chat right now. Thanks for the encouragement, guys. Hero's always there, butt in the seat, like I said in the podcast. And if you are out there and you're a Team Tackle, say great job, Hero.
Great job, Hero.
Acknowledge his interview on that podcast. Hero, I did enjoy that as well. Matt's dead on. Guys, we're done here today. We'll see you tomorrow. If you're a pro member, great. We got Coach's Show tonight. We got all kinds of stuff we always do, including our lounge and our content. Go finish the steps.
Are we module 6 tonight?
Well, we're done.
Oh, we're done?
Done. We're now moving on to other Delta strategies. I think we're doing protective put tonight, if I saw the content production thread correctly in Slack.
So we're going back to our strategy of the week.
Yep.
Basically, Delta. Okay. Yep. And we'll be recording those. We call them for the playbook, guys. We're going to be recording those and have them on the website so that you can go back and review all the rules for all the systems and strategies that, you know, you learn through Tackle.
Yeah, absolutely. Good job, Matt. Good job, Cody. We'll see everybody tomorrow. Yep.